Hello everybody, welcome to your Friday weekend edition of TraderMerlin Show. Hope you had a great trading week out there. Cheers to everybody. As you know, I like to have a nice cold beverage on the Friday shows. Today we're actually supporting local distilleries. I would encourage you to do the same thing. That big brand stuff's no good. But we got Blinking Owl, which is a local small batch distillery here. For wherever you guys live, there's always these really cool little boutique small distilleries in a wide variety of things. So if you're into whiskey and things like that, check it out. All right, we've got a lot to talk about today. And first off, shout out to everybody. I see we got Sue, as a newcomer on our show today. Hello, Koja, Terry, Naum, Jorge as well. Good to have everybody with us. Luis, Ivsy as always. You guys may have noticed my picture here. I went out to Boston last weekend. Just had a great time out there. Beautiful city, just some great people. And I decided want to do our Trading Week wrap-up picture from Boston Harbor. All right, wicked. Going to eat some cannolis here. Let's start things off with, obviously I'm going to ask you guys to send in as many questions as you want because I'm alone in studio today. I say studio, it's my office in my house. I do want to talk about a wide variety of topics today. Certainly one of the main things that was coming up yesterday in the chat was you guys were talking about the Snow IPO. Maybe it was 2 days ago. We'll talk about that. We'll talk about some of the announcements coming out this week. And, of course, go to listener questions, which I have a bunch of. So I thought what I would do first is I would real quickly go through the 3 questions that came in last night so I can get those out of the way. And then we can do more of a free form as we progress through today's show. So let's start there. All right, first question comes from Alice. Says, I bought Workhorse at 1923. Where would you get out? And, I've gotten these questions a lot over the years, and I have to say it's not my trade, Alice. I didn't make this trade, so it's not a question of where am I going to get out. It's a question of when you made this trade, you should have, in your mind, been thinking, here's where I'm going to get out. And I would love to see that number of what you thought. Quite often what happens, and I think many in the room would attest to this, is you buy something and all of a sudden it starts to move in your favor and you forget about or don't care where it's going to go. You just want to keep making money. What I found is that ultimately turns against you and you'll probably end up losing money. So you have to be more proactive in your approach here with regards to setting your targets, your stop losses, and how you manage that trade once you're in it. So I looked at Workhorse here just a minute ago. Let's go WKHS. Here is your daily chart of Workhorse, which I'm sure you guys all would love to be in something like this. It's just a phenomenal chart. This is workplace software and database integration things. Over the past couple years, it's been phenomenal. I mean, you're talking a stock that back in March was only a couple of bucks. Now all of a sudden, it's kissing $30. Actually, it's over $30 today on the daily. So I'll put a line right across where Alice says she got in on this one. And I think what you said, 1923 was the number I'm looking at. Let me make sure I got that right. Yep, 1923. So let's put that on here at 1923. First off, I've got to ask you, what made you want to get into this one? I mean, obviously we see the huge run-up, but if you bought it in 1923, that's a pretty precarious spot. I don't see any real great reason why you wanted to get there. Maybe you thought it was a breakout trade to the upside. Of course, I'm assuming you bought it in September on the breakout. Maybe you bought it in July or August, but it's not the best entry price for me. That's okay. Let's go forward from there. So you're in at 1923. It's currently trading at $30.60. So basically you are up huge. I mean, you're up $11. This was just round up called $11 per share. Where would you get out of this one? The challenge is, and I'll go back to a weekly here so you guys can see, there is no historical data really to go off of, right? Here is all the way back into 2016, and you can see its high was only about $10. So clearly it's in vogue right now. This is one of the darling hot stocks that you would be looking at in our marketplace. So how would you manage this one? You got a couple different ways you can do it. First, Alice, if it was me and I'm up this much, I mean, you're up over 50% on your trade in 9 trading sessions, I, without a doubt, would take some off the table. And I don't know how many shares you have of this one, but I would take half off immediately. Monday morning, market opens, I'd take half off just because I want to make sure I lock in some profit. That second half now becomes, right, Mark says nothing wrong with getting out now. I agree, but here's the problem with that. And it's something that's plagued me in my trading career, and I'm sure it's impacted some of you. You're in a situation like Workhorse, and it could be any stock, doesn't matter, and it's just ripping up. You're up 50% in a short period of time, and you go, I'm just going to take all this profit. This is great. It exceeded my expectations, and I'm out. And then you look at it a week later, a day later, a month later, and all of a sudden it's trading at $150, and you're going, you have got to be freaking kidding me. It's it's 5x what I got out at, and I already got out at almost double my entry price. So part of me says, yes, there can nothing wrong with getting out now and locking in profit. But what if this workhorse becomes the new, Salesforce or something like that and just keeps on going and going and going? So what I would do is one of two things. You can either do a manual stop, which is it's kind of a little bit of a pain in the butt because what you have to do is change it every day. Or a manual stop would be something like this, Alice. Let me put it on snap mode. And you can see I just put a line across today's low, which is 28.05. So you put a stop loss down below that amount and say, all right, if it gets down to 27.95, I'm out. That seems logical, right? You're giving it about a 10% move. Well, not 10%, about an 8% move to the south side before it gets out. So that's one way you could do it. And every time it keeps making a higher low, just move that stop loss up. The other way is a little bit easier. You can go into advanced order routing, and you can see up at the top of my screen, it's kind of hard to see. You could set trail stops, right? And trail stops would probably be a better way to do it, which is Batanai just says, I would trail with my stop below the previous day's low. Right, and that's manual, where you'd have to sit there and watch it every day at the end of the day, or you could just use an automated trailing stop. Now, there's two different ways we could use those trailing stops, and this is a matter of personal preference here, so you guys have to figure out which way you like. You can do a trailing stop as a percentage, like, okay, I will let Workhorse move down 2%. I probably want to go more than that, given how much. Let's call it 6%, right? I'll set a 6% trailing stop, and keep in mind, as Workhorse continues to go up, 6% becomes a bigger and bigger value with regards to the price movement. If I do 6% on a $20 stock, that's a $1.20 stop. If I do 6% on a $30 stock, it's now $1.80. So it's going to slowly start to make that stop loss larger, which some people like. Others would just do an outright dollar amount, and as it continues to move up, it would stay there. So for example, if we did, let's say, a $3 stop loss on Workhorse, right now that'd be $27.60. And as it moves up, it's still going to stay at that $3. And if at any point price comes down below $3 off of any peak, it would take you out of it. I would probably myself do it as a percentage and just let it run, because right now, I mean, this thing is really hot. For whatever reason, I know it's in vogue and there's a lot of them out there. You don't want to, I don't think you'd want to get out of all of it. Unless you're really nervous, then just dump it. But I personally think sell half on Monday, trail stop that second half, and just let it go. But nice trade on Workhorse. I mean, there's a few out there that have been looking absolutely phenomenal. I thought it would be... Mark says, or you can sit glued to this screen every second to find a point to get out. Don't torture yourself like that. That's what we're trying not to do. It's saying, let me use these tools, which are the financial markets and my software, to my advantage, and just relax a little bit, right? And just let it do its thing. Coach says, what about the 12-period moving average when price closes below, or just get out? Okay, you could do that as well, and I'll show you. The challenge here is a little bit more complicated if you're using this moving average. So right now I've got a 50 and a 200 because we're going to use that for part of today's discussion. But let me go here and put a 12 period on. So now you're looking at the screen. You guys see you got a 12 period moving average. That's the red line that's on the screen now. So you got a red one and a blue. Hey, Chef E, thank you very much for the contribution. My neighbor to the north. Happy Friday, my friend. Thank you very, very much for the contribution. I appreciate it. Chef, I never see you ask questions, brother. Send me some questions. As you guys can see on this chart, we are well above this red line. I mean, it's accelerating very, very quickly. My only concern there, Koja, is if you're using that one, look how far away it is, right? Remember that Alice is in this thing at 1923. So if it came all the way back down and took her out right around this, let's call it $24 mark, and she's only going to make $5, which is still good, but boy, that's giving back like $6, $7 of profit. I don't know if I'd want to give back that much. So I don't have a problem using moving averages, but if you notice how quickly something is accelerating away from a moving average, you're now potentially giving back a lot more than I would want to, if that makes sense. Raj says, what about the 8-day moving average? Sure, you could tighten this up. Notice right now, if I use the 12-period moving average on this, and for those that don't know what moving averages are, this point right here, which says $23, oh, is that green? I think it might be green. $23.96. That is the average closing price of the last 12 candles that you see on your screen. So just go from this one here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Goes all the way back to this red candle here, which formed on the 2nd of September. From there, it's taken the closing of every one of these candles, dividing it by 12. So the more candles we put into it, generally the further away we're going to be with price. Now let me go and shorten this up a little bit, and it's going to make it even tighter. So 8, you're going to see this price on the right side of your screen here, this 23.69, jump up considerably because it's not taking into consideration all that old data. So now all of a sudden it jumps to 25.82. So you could be using this one. So Raj says use an 8, Koja says use a 12. I don't have a dog in that fight. I just know for myself, if something starts to move up this quick, I don't want to give it the chance to move down as quick and erase all my profit. So you could be using this, but to automate it, to actually have it as a trigger, can be very complicated in some platforms. So I would probably shy away from that just because of the complexity of integrating those orders into your platform to have it trigger a sell order, sell stop on a moving average. Okay, cool. Tom Bar says set a trailing stop for half instead of selling half, and set a second trailing stop lower for the other half. Sure. And this is why trading works, guys, because Tom might have that approach where it's like, look, this thing's rocking right now. Why sell anything, right? And I could totally validate that argument because this thing looks like it's ripping. So, okay, we set one trailing stop here, one trailing stop slightly lower, and let that thing continue to run. The only time that Tom would lose on that one is if all of a sudden Monday morning this thing came and turned around and ripped back down. He would probably give back a little bit more than the person who sold right away half and trailed the second half. And we're splitting hairs here, but it's just what strategy do you feel more comfortable with? I, for one, like to sell half. That way I know I've locked in profit. I'm not going to worry about a 50% gap down tomorrow. I mean, you guys have all seen this happen. I'm sure most of you have seen this happen where a company like this, Workhorse is doing great, and all of a sudden, an accounting irregularity, or the CEO gets, arrested and dragged out in handcuffs. Well, it could take a 50% haircut instantly. I just love knowing that I've locked in some profit. And, truth be told, in doing that, I've left a lot of money on the table. It's okay. I am totally fine with that. It's just a matter of are you okay with that? Raj says, should not forget slippage. Yeah, generally slippage is going to be an issue, especially in fast-moving securities like this. One way we can help, fix, that's not what I wanted to do, fix or at least identify the risk that volume poses or slippage poses to us is to just add on volume. So here's the average volume. You guys can see it's doing 20 million shares a day. So you're pretty safe with this one. You're not going to get a lot of slippage on Workhorse because there's 20 million shares traded. Most likely those spreads are rather tight, okay? And that is certainly something that you want to be looking at, as opposed to some other stuff. I'll give you an example. One of the more popular ETFs right now is DVEM. It's an emerging markets, right? So I'll show you DVEM. DVEM. If you were to, do now I'm messing things up here. If you were to do a trailing stop on DVEM, you're not going to get much. There's not much data, right? So it's just all these weird gaps. You notice how choppy and gappy it is. Boy, I tell you what, you could really, really hurt yourself. It trades an average of about 18,000 shares a day. So if you had 1,000 shares of this one, you're gonna hurt yourself by trading DVEM. Anyway, just wanted to show you a little bit of an example there. Yeah, Koja says Tesla down 20%. Yeah, probably deserves to be. TSLA, here's your Tesla on a daily. God, there's so many discussions we could have about this one today, which I think we will. Off of its peak, certainly down a lot, but I tell you, I would not mess with this one. Guys, next week, you could sell calls on Tesla for $550, right, which are $110 above current price, and get $90. $90. It's because this Tesla battery day, which is coming up, is gonna, could be wild for it. And I would not touch Tesla right now. I would stay away from it. Okay, cool. I got Alice's question out of the way. Let's go to the second one that I got, which is FAANG stocks. I know we got Tom here who's loving FAANG stocks and his FAANG ETFs. And conveniently, Tom, I don't think you sent this one in here. You didn't send this one. It was a different Tom, but we got two Toms and both of FAANG. It says, with the FAANG sell-off, where would you buy in? That's a tough one. We did this with Tilly Allison the other day, which I actually thought turned out pretty good. There's a lot of different places where you have potential buy points on these FAANG stocks. And of course, the FAANG stocks, as you guys all know, is going to be Facebook, Apple, Amazon, Microsoft, Google. It also has in there NVIDIA, it has Baidu, it has Twitter in this ETF like FNGD or FNGU. I would probably look at some of the, just bring up the individual charts and review the show we did with Tilly last week. You know, we talked about this level that's happening right now on Facebook. Let me disable that one. Right, and the question was, do we see it bounce here? And you know, it actually has turned. The zone for me is starts right there. It literally came down to the penny twice. The top of that zone is 250.19 to buy on Facebook, as one of the levels we talked about with Tilly on Monday's show. Or was it Monday? What day was that? I'm losing track of time. It was Tuesday's show with not this Tom. Yeah, Tom. I know you were the FNGU. You guys noticed that the low of this candle yesterday came down to $50.19, exactly where that line is. Today it came down a little bit lower to $50.05. So two times it's double tapped this area of demand, which we identified on Tilly's show back on Tuesday. And remember, when we were on when Tilly was on the show on Tuesday, guys, we were sitting right here. That's how it looked, right? This red candle here. So if you took that one, great. My only concern here is I'm nervous about this big gap, and just for Joseph, the white space here, as somebody might call it, the white space. You have an unfilled gap there, which, you know, if we get down below that 250 or 248 mark, you know, you could see it crash real quick. But I would go through and individually look at these FAANG sell-offs. And Tom, who sent in that question, go look at Tilly's show from Tuesday. We basically broke down all of the FAANG stocks and gave different buy points, and all of them are going to have different triggers. The interesting one for me is Apple. You guys all know it's in my trading plan that I can't trade Apple, and I tell you how badly I want to violate that. I really want to sell some puts here and sell it like either one of three prices. It's either going to be 103, 100, or 96 are my three strike prices that I want to sell. You won't get a 96 strike price because it trades in increments of 5, or 250. You know, I'm looking at this Apple chart here, and it just feels like it's going to come back down to that 100 mark, and I would love to end up selling some calls there, or selling some puts, but I'm not going to because I can't trade Apple. It's a bummer, but some of you guys can. I think there's plenty of opportunity in this one. You know, if you look at how far Apple has come off of its high, right now, off of its peak, you're looking at down 22% in 16 days. Bear market territory for that one, but you know, Apple will get back on its feet. It's probably just going to end up closing this gap here. So, yes, Murphy's Law. I don't like Murphy. Murphy always gets me in trouble. Okay, let me go. So Tom, who sent in that question, not the Tom Barr who's in our group today, but a different Tom. I would go through each one of these, and again, just review Tuesday's show with Tilly Allison, because we did break this down and gave some buy points on buying in. Okay. Another one, Sheena, who was usually with us. I think she just watches the recordings now. But Sheena sent this one in on Instagram to me. It says, look at the Euro-US dollar. It looks like it's changing from 4 consecutive head and shoulder tries to the inverse head and shoulder if it breaks up through this neck sometime soon. Okay, this is one of those ones where it just feels like, you know, if you torture a chart long enough, it'll tell you everything that you want to hear. EUR-USD. I'll get to that question soon, Adam. We'll look at gold here as well. I don't know if I would necessarily call this head and shoulder, inverse head and shoulder. I just call this basing. It's slowly drifting up. And let me take off the drawing snap tool, and I'll just draw some lines in here to give it a basic idea of which way it's headed. I'm just going to create that one line, and then I'm actually going to go create a parallel, just so the angle stays the same. And it's rough, but I think you guys can see. I mean, we're really just in this channel. So, you know, I think at this point, when you're looking at potential chart patterns, don't focus on so much the head and shoulders. At this point, it's just chop. But is it oscillating back and forth between those two lines? I think we'd all agree, yes. So if you are looking for USD plays, you know, right now you're coming close to a buy point as it hits that lower part. Actually, just hit it yesterday. So this is how I would look at it, Sheena. I wouldn't look at it necessarily as a head and shoulders formation, although I do find those very useful. I actually love head and shoulder patterns. But the fact that it's tried so much and failed over and over and over and over again, I would not put as much emphasis on the chart pattern as far as head and shoulders or stuff like that, and just focus really on what is it doing. It's just traversing sideways. So let me show you guys something here real quick. There's a bunch of different screeners that I like to use, and these chart patterns, like Sheena just pointed out in the Euro USD, which right now does look bullish. You're at the lower end of that range, and it looks like it's not as accelerated as it was back in July, but it's still moving up. Many of you have asked, where can you find these patterns? I'm going to show you one here, but I have to just with a big asterisk say be careful, because quite often these are not great patterns. So if you go to FinViz, and there are a ton of different sites out there that can give you relatively the same information. Here is FinViz. I love FinViz. I think it's a great resource for you guys. Scanning, filtering, generally free for pretty much everything they do. If you scroll down on this main page, and I'm going to try to make it bigger so you guys can see the lettering. I know it's small at home sometimes. You notice down here, there's all these different formations. Trendline support, trendline resistance, horizontal support and resistance, wedge up, wedge down. Here's my two favorites, ascending, descending of triangles. You've got double tops, multiple tops, blah, blah, blah. Here's head and shoulders. And it only has one right now, and I personally would not call this a head and shoulders. It's on PHAT. I think you guys can all see that. It's a bit of a stretch. You got this large left shoulder, the head comes back down to the neckline and has formed the right shoulder. Yes, it's loosely a head and shoulders pattern, but it's a bit of a stretch for me, especially when you look at something that's lasting over almost 1 full year to come to fruition. So I'm not a huge fan of this, but this may be something to help you guys out. Now, real quick, since you guys know that I'm a big fan of ascending and descending triangles, let's just go look at the descending triangle list. And I'm going to go through them one by one, and you guys tell me. How about this one? NBTB. Yeah, I call that one a mess, Joseph, as well. How about NBTB? Do you guys look at that and really see a strong descending triangle? You know, I just don't see it. You know, they're trying to justify these formations. And while I will agree that NBTB is getting weaker and weaker because it's making lower highs for the past few months, it's not really a descending triangle. What about WEI? Okay, maybe this is probably a little bit better, but guys, what's the problem with this? What's the problem with WEI? I've got a descending triangle pattern forming here. It goes all the way back into 2020. You tell me, what's wrong with WEI? Why could you never take this trade? And if you told me you were taking this trade, I would probably be pretty rude to you in this environment and call you a friggin' idiot. What's wrong with WEI? Come on, guys, tell me. And gals, you should all see it clear as day. I mean, it would immediately just void this trade, and I would move on to something else because it would be a fool's errand for you to even think about trading this. As I refresh my tasty beverage here. Nobody? Bueller? Guys, it's $1.05. So you got this beautiful descending triangle, and if you go back and use all the metrics on how you're supposed to calculate a descending triangle, it would put a target on this of negative 70 cents. You're not going to short a dollar stock. I mean, come on. Unless you're, Timothy Sykes, who claims to have made millions shorting penny stocks, forget it. Yeah, there's no reason to even look at this thing. All right, TBT. Let's see, TBT has actually broken it. So this is not a descending triangle. This one here, the SMMF, this is just garbage. This is pure sideways garbage, just chop. So none of these look like great descending triangles. Now, maybe some of you guys have seen on some charts in the market good descending triangles. Like, here's another one. It's a 91-cent stock. You think I care about this? Who cares? There's no way for me to make a trade off this thing. What am I going to do, short it from 90 to 80? Woo, I made 10 cents with unlimited risk. That's just crazy. Okay. This is probably the only one that I look at and say, this has potential, and it's VNet. And you guys can see you have this real big run up here on ViaNet, It's been selling off, making lower highs, although it's slowly drifting lower on that. This one might have some potential because there is some meat on the bone. If I short it at 21, I can maybe get it down to 15 or 10 or something like that. So anyway, I wanted to show you this because I think it's a great resource for you, but don't fall for their calls all the time. A lot of times these charts are just not good. Now there is one out there which is going to go right back to, I believe his name was Adam. He said, when do you think we'll see the move in gold? Let's bring up at GC. Because at GC was actually forming a better descending triangle, but now all of a sudden it just flatlined, right? And we could look at it from multiple perspectives, but I think if you look at it from here and you kind of scope your line down and through there, you had a descending triangle, but now all of a sudden it's gone flat. And that's the part I don't like, when it just goes flat like it is right now. We could argue that maybe we just readjust this line, and maybe this line needs to be drawn from here. Again, technical analysis, guys, is the art of torturing a chart to tell you whatever you want to hear. Bottom line is, it still is holding up. If we were to get a close, let's say below 1920, then I might be more interested in looking at this as a potential short, right, on GC. And to Adam's question, when's it going to happen? Oh, man, I don't know. I've got no crystal ball. Bottom line is we just have to set up parameters for our trades and hope it comes to fruition. If I'm looking at this, it's rather challenging because the range is so wide here on a futures contract. You're probably not going to have that big of a range. Why? Because here would be my stop loss. This top line would end up being your stop loss, which is a 67-point move in the futures contract. That's a lot of money, my friends. So I might actually go down and look at GLD, which would be a little better, right? And you guys can see that same basic picture, that kind of trend line. It feels like it's been violated. Of course, man, I could torture it and put it over here. My stop loss is going to be somewhat similar, right? I'm going to want to put it above these most recent highs. So until it gets down below 179, I'm not interested. I'm not going to touch it. Okay? You guys good with that? Just a little pattern stuff, a little overall market pieces. Again, if you have questions, feel free to send those on, and I will try my best to get to all those. Steve Hall says, white space is just a term someone who may not be named unless you describe lots of trading. Yeah, that's great. Okay, let me go to, what else do you want to get into? Let's talk about snow, okay? You guys might have heard all the talk about Snowflake. This is for those that might not know, this is a company started by the Democrats, so the Republicans can start making fun of them. It's called Snowflake. I'm totally kidding. This is not I was just making a joke. Don't get all riled up on me. Snowflake is a technology company, a cloud company, and there's a belief that this is going to be the next big monster company. I've mentioned this before in understanding how IPOs work. You guys have to understand that if you're buying an IPO, you are buying hype. You are buying marketing. You're buying someone's best effort with tens of millions of dollars behind it to push you to buy something. They're influencing and swaying your decision through hype. Here's what you got to understand. When an IPO goes public, and it like Snow did a couple days ago, that's the result of thousands of people working to pump it up. What they do, and I believe Snowflake, if I'm not mistaken, was underwritten by Goldman. I might be wrong on that. I saw the list this week, and Goldman's behind almost every IPO this week and next week. So if I have a company, and let's just call it XYZ, whatever it is, Goldman would come to me and say, we want to buy all your shares. We're going to take you public. And I say, great. How much are you going to pay me per share? And they go, we'll give you $10 per share, but we're going to buy all of it. So Goldman buys all my shares. Of course, the execs get to keep some, valued at X dollars. Then what happens is the underwriter, in this case I'm using Goldman as an example, will go out and they will try to pitch that to anybody they can to drum up interest, to get people fired up for it. And as they get closer to that IPO date, when it actually goes public on the exchanges, they're going to keep pushing and pushing and pushing, trying to get as much excitement built into it. Now, if they don't get a lot of fanfare, what they'll do is they will now parse out pieces of it. So let's say it's a total of 50 million shares. They might go to Merrill Lynch, they might go to Wells Fargo or Bank of America and say, hey, I'll sell you 5 million shares at $11 because I already bought it for 10. I'll sell it for 11, make a small profit, and our IPO prices we're shooting for 15. Okay, so right away, as Goldman, I'm trying to make 50% rate of return on my investment. As it gets closer and closer to that event, if there's enough interest in there, a lot of times people will jump on the opportunity to buy it, right? So what happens is the underwriter is going to pull back and say, I'm not selling to you guys because now I know I've got demand. And I can give it a strike price, an opening price of $15, but the demand when the market opens is going to push it up even higher. Case in point is Snowflake. As Gemini just said, didn't Warren Buffett invest $250 million in Snowflake? Not only did he invest $250 million, but he also bought another 4.4 million shares. Right now, it's trading at $240. You can see the amount of money here. And what makes this special is that Warren Buffett never does this. So you guys have to put on your thinking at here. Am I being thrown a giant pile of steaming crap by the industry? Because Warren Buffett never buys IPOs. He doesn't believe it. He's never bought an IPO. From my understanding, he's never purchased an IPO. All of a sudden, he does it first time. So what do you think the industry is doing? Are they talking about how great Snowflake is? How wonderful this company is? Or are they going out there and saying, hey guys, Warren Buffett bought it. You should too. If you notice the news, what's happened, that's exactly it. Now, I'll show you the price chart here of Snowflake. And you notice we have no data, so let me put it on to like an hourly chart just so you can see at least some price chart. So there's your hourly chart. Gosh, I'll probably go 15 minutes to make it look nice. here is the entire history of Snowflake. That's it. That's all you got. You notice I'm going to put a line on the very first trade that happened, just so you guys understand how this works. Because if you were calling up your broker saying, hey, I'd like to buy some Snowflake at 120. Remember, the original price of Snowflake was supposed to be $120 per share. Let me ask you, when Warren Buffett bought his $250 million in Snowflake, what price do you think he got? Any guesses? Do you think that Warren Buffett paid that price of $240? $245 was the first official trade that happened. Do you think Warren Buffett paid that price? I'm willing to bet you any amount of money that not only did he not pay $245, he didn't pay $120, which was the original strike price, the offer price. It got bid up because of popularity. My guess is because they knew they had him on board as a buyer of $250 million, they probably gave him a significant discount plus warrants, which would allow him to buy more in the future at a discounted price. Why would you do this? Yeah, Adam, my guess is it's probably like $100, right? I'm waiting for it to split. Joseph, cheers to that. You just made my day. It's not going to split for a while. So if you look at what Warren Buffett got in, he got in way, way cheaper. Now, here's an example. Pick any company idea, right? Let's say that you want to start a tequila company. You want to start a tequila company, right? It's cutthroat, lots of competition, and you're going from store to store trying to sell your stuff, and it's just not happening, right? You're not really getting much sales on tequila. But all of a sudden, you know someone who's got Dwayne "The Rock" Johnson as a friend. You go, hey, tell you what, I will let you buy into this company at a discount. I'll let you buy some shares. We'll give you some of the pre-IPO price of this tequila company, but I want to make it public that you are an investor and a holder. And he'll go, great, yeah, sure, I'm buying a discount, I get free tequila. And all of a sudden, The Rock is now behind, I think it's Termana Tequila is his company he's working for. That company would have done nothing. They'd be an obscure tequila that most people would never have heard about. But now because The Rock is there, this is a contender, right? This is going to, Jose Cuervo's looking at it going, Don Julio's got something to worry about here because The Rock can push it. This is exactly what happened with Snow, guys. Warren Buffett steps into the situation, and all of a sudden, everyone wants Snowflake because if Warren Buffett's buying it, I'm buying it. So here's your price chart. My guess is over the next 30 days, I wonder if I can run some bets on this one as well. We talked about the Nikola stock when it was up in the $70 range. I said it's going to be below $30 by, I think it was a month and a half or 2 months. My guess is that Snowflake will be below, I'm going to say 150 in 60 days. Anybody want to take that bet? I mean, that's a $100 drop from where we're at. Below 150 in 60 days. I'm going to write it down. Less than 150 in 60 days. That's a pretty big sell-off. But remember, all the analysts, everybody else who's evaluated this company has said 120 is the fair price. That was what the IPO price was. Yet the first trade that came across was 245. Yes, I know it's cloud computing that runs on, and they have to beat Amazon. Exactly. Hold on, where'd that go? It took out. Tom, you took it out. You redacted that one. I was reading it. Yeah, they are cloud computing, and they're competing with Amazon, Microsoft, Google, web server. I mean, I don't know. To me, you're going up against David versus Goliath, right? You're looking at an absolutely monstrous company companies like Amazon Web Services, which is pretty dominant. So is Microsoft. And this is the newcomer. Good luck getting people to move away from Amazon Web Services now that they're using those products. I don't know. I think it's going to be real tough for it. And even valued at 120, dropping down to 150. All right, so no worries. Let's see. Mark N wants to take that action. What are we going to wager, Mark? We're going to wager, we're going to do a bottle of Blanton's. Yeah, I'll wager. I'm no problem with that. Let's do a bottle of whiskey. Wait, Mark, where are you? I don't think I can ship whiskey over state lines. That might be technically illegal, and hey, we want to stay out of it. Yeah, Raj, you could buy at 100, but remember, you are competing against the biggest people on earth, and not that you can't do it. I mean, look at Tesla. Right? Tesla's competing against Ford, General Motors, Toyota, Honda, all these car companies, and they're doing rather well. So it's not that it's impossible. But boy, I tell you what, when Amazon Web Services, Microsoft, Azure have their tentacles in all these businesses, there is, barrier to entry. barriers to entry, and that barrier of entry may prevent them from even getting their foot in the door. So I don't know. I think that they're going to have some struggles. Vancouver. Now I'm going international. We'll have to come up with something, Mark. No option. No. Generally, you won't get options for the first 30 days, right? Because technically, you're not allowed to short for the first 30 days. Now, some will allow it, but it's real shady. Yeah, you wouldn't be able to capitalize on it anyway. And remember, there's a holding period, a freeze period, where those who bought the shares early on the IPO are forbidden to sell those shares. And you can go look at the prospectus and look at the IPO filings to see what those numbers are. A lot of times it's 30 days, 60 days, or 90 days, depending on what the share structures are. It's kind of interesting because, if you got in this thing at 120, if somehow you knew Goldman and a buddy of yours there, and you said, here's some shares for you, and you got those at 120, you wouldn't be able to sell until those dates come up. But it might be interesting for you guys, if you are looking at SNO and potential buying opportunities, look at when those holding or freeze periods end, because you'll all of a sudden see selling come in right at those moments in time. It's very, very predictable. All right, what else did I have for you guys today? I did the workhorse one. I did. We talked about. All right, I gotta put this down here. This is SNO. I want to make sure I write these ones down so we can go back and visit them. Tyler says barrier to entry reminds me of high school. Are you talking about your dating life? Yeah, Tom says IT guys like their enterprise computing solutions. Right. I buy a Microsoft product. I have everything I need all in one stop shop. That gives them a massive advantage. Same thing for Amazon, right? If I'm doing sales and I'm using Amazon systems, I want to use all their services because they'll bundle it and it makes it cheaper. Snow's going to have a real big challenge getting in that space. All right, I won't beleaguer the point. I think we all get it. What else we got? Let's see. Any other questions you want me to go into? I think I saw one here on a currency. Where was that? Was it British pound? Can we look at FNGU? Sure. This is one that Tom, who's in here, probably knows more than I do. He's always in this one. FNGU. Basically, Tom likes to go long this one, set a trailing stop, and been doing rather well on it. To me, you first off, you have to understand, it even says in the prospectus, this is not a buy and hold instrument. All right, just so you know that. It is not a buy and hold instrument. It's specifically written in the prospectus, which I was actually happy to see that written, because most people will look at triple leverage instruments and go, oh, I'm going to hold it for 6 months a year. You're just going to lose money. From a technical perspective, it's not looking very good right now. I don't think that the damage or pain is done for the FAANG stocks and some of the others. So, I guess it all depends on what your risk tolerance is. I, for one, am not thinking about going long right now on FNGU. There is a little bit lower. You can see there's a nice, where it bottomed out and then gapped up the next day right here at 134.50. That's a $30 move, a $30 drop from current price. So that would be a point that I would be interested in it. I know some of you may be looking at this lower level here, right around 152 as the bottom for this last couple week chop sideways action, and that might also be a buy point. I personally don't really like to trade the triples. I think they're a bit dangerous and can get you into trouble. So I'm not a huge fan of the triple leverage FAANG stocks, but that's my perspective on it. And I know that Tom, you were looking at basically going long this thing and setting a nice trailing stop, and just if it hits a stop, great. But it tends to move up more than 10%. So if you have a 10% stop, great, it works. Certainly it was working back in August. August was probably a phenomenal month. Now all of a sudden that little opportunity that you're exploiting has changed. Not that it's gone away, but right now I think you got to just watch those FAANG stocks before you start jumping into FNGU. Let's see. I reviewed GBTC. All right, go back to Bitcoin, huh? Okay, we'll do the GBTC. Similar picture that you see with those FAANG stocks, right? It's had a really significant fall from grace. You guys saw what I did. Let's just do... what did I do? I think... let me see if I can draw this again. It's hard to do, but you can do it in TradingView, where you can actually see if you're at a premium or a discount on GBTC. So let me go in here, and I remember how I did it. Basically, GBTC is supposed to be 1/1000th of a Bitcoin. So we will go into here. I'll bring up this one, go full featured. Bear with me, guys, as I'm trying to do this all this live. So I'm going to go, what was it, BTC USD minus, what do we do, GBTC times 1,000. And this will tell you how much of a premium you're paying or a discount that you are paying. Right now, it's actually getting better because you go back into August, you were paying $2,600 more, $2,700 more per Bitcoin. Remember, GBTC is supposed to be holding physical Bitcoins. Right now, you're still paying an $800 premium if you were to buy GBTC right now long. So my gut would tell me to just go ahead and buy Bitcoin. And you can see there have been a couple of times where, now I lost it. I'm going to have to write that one down in the code over here just so we can look at it every now and again. With regards to Bitcoin itself, it has certainly had some struggles here over the past couple of weeks. That big sell-off we saw early September, but it's slowly drifting back up. All in all, it's still making higher highs, right? Still working higher highs. My guess is you'll probably see this rally and challenge that $12,000 mark here in the next couple of weeks. I have to say, and everybody knows this, I am slightly biased on Bitcoin simply because the math behind how it trades and how it is emitted or minted, if you will. So I'm bullish on Bitcoin. If you get below 10,000, it close below 10,000, then all bets are off, and you'll probably see it drift lower pretty quick. But I do think you'll see it kind of grind its way back up here, especially now that you have exchanges like Binance is running full page advertisements and on bus stops in the UK. They're doing a real big press, getting more publicity to the utility and how to use Bitcoin on a regular basis. So that makes me long-term bullish. Louis says, wait. Can you do that with Forex currencies to be used as basket currency? What do you mean, like create your own? Yeah, there's a lot of stuff that you can do with TradingView. There's a lot that you can do there. Actually, Brandon Wendell is probably the best at it. I don't use it as much as he does, but he's really, since he does so much with spread trading, that's really his whole signature series with OTA is like spread trading is kind of the forte of it. Yes, you can compare them. You can create baskets and all sorts of really cool things that you won't be able to do with most other platforms. It's one thing I really like. Let's see. What else? What else you guys got for me? We need a bullish catalyst, so pray that battery day works out well. Joseph, are you long? You're trying to get these markets to move up? I assure you that Elon Musk is going to say something outlandish on battery day and really get this market popped up. That's just what he does on a regular basis. Okay, Luis, what I like to do actually as far as Forex is I actually just do a price comparison chart. So I do that in TradeStation where you can put in 4, 5, 6 different ticker symbols for the different currency pairs, crosses or just straight pairs, and see which one's performing better or worse compared to all based off percentage. I like using that one. As you guys know that Walker Anglin, David Warner, they all like using Forex Factory. There's some great resources there as well with regards to showing rate of change and how one currency pair is relating to another and changing over time. How would you get into BTC with less money, says Tyler? Well, if you look here, I'll have to recode this. It's BTC. Let me actually add the symbol here so I can permanently have it. BTC minus GBTC times 1,000. That's the formula here, and that should get you, let me enter that in, and I'm hoping it puts it at the bottom. Great, there we go. So I click on this one, you can see, no, didn't do it. Dab nabbit. 1 second. BTC USD minus GBTC times 1,000. Okay. I'm guessing this is... So what I've done is simply taken GBTC, which is supposed to be 1/1000th of a Bitcoin, times that by 1,000, and then subtract it from Bitcoin. That's what I just did there. So if you technically want to buy at a discount, you have to buy anytime that Bitcoin is above the zero line. You can see it doesn't happen too often. It's because this ETF, or not ETM, this trust that is GBTC, it's rarely at a discount. You're almost always going to pay a premium on this one. That's just what it's all about. You see there's been a couple of times where you could have, but anything above zero means that you're paying less than you should per Bitcoin. Notice there's been some extremes here. Like back in February, you'd be paying $3,600 more per Bitcoin if you bought GBTC than if you flat out bought Bitcoin. There you go. Let's see. I see Dwight Traderman finally got a Twitter account. Yeah, he did. His discussions are hilarious with Mr. Traderman. Made some killing and put options from last week on Facebook, AMD, Apple. It is all about demand and supply. It is 100%. I think it's 100% supply and demand. It's also about over demand, right? I think that we've seen in those FAANG stocks a little bit of euphoria and over optimism. And as we start to see economies come back online, COVID numbers starting to drop, the death toll really nothing that bad. It seems to me like with all the extra capital that's put in our markets, we'll probably have some nice rallies. But I do think you'll see money come out of some of the high flyers. Prime example, I mean, remember there was one I was telling you guys about that just made no sense. It was one of the biggest gainers on the year, Overstock, OSTK. I don't know if you saw this one recently. Talk about a fall from grace. This thing went from over 120 down to 60. A 50% drop in 2 weeks. Hallelujah, hallelujah. Hopefully you did not buy that one. And it's funny because I was looking at buying some puts on it. I said, it was just too risky. You know, who knows what's powering Overstock. Anyway, all right, that will do it for that segment. Let me go back to your economic calendar because I want to show you some of the stuff that's coming up next week. Now, next week is a very interesting week. As you guys can see here, the third line item is USD Fed Chair Powell speaks. It's a very busy week for you guys. And of course, I'll be talking about it every day on the show, but Powell will be speaking 4 times on major public events next week, 3 of which will be in front of Congress. So really got to be careful with that. Most of those are going to happen 30 minutes into the trading day. One of them happens 1 hour into the trading day. But bottom line is it's going to create a tremendous amount of volatility at that time. Because remember, Powell is probably the most influential, powerful person when it comes to moving the markets. I know you're thinking Trump and his Twitter account. Yeah, he's fine. But Powell can do something that's much more long-lasting, and he has made comments negatively. I think Wednesday's meeting, is it Wednesday? I think Wednesday's meeting is on COVID, and last time he made COVID comments, it was not pretty. Market dropped significantly. So he's got an announcement coming out. This is, it says here 7 a.m. That's 7 a.m. Pacific, so 10 a.m. East Coast time. No other real announcements other than central bank members and deputies. You got Australia as well speaking. That's pretty much what we got cooking for your Monday session. All right, I think that's going to do it for me. I don't know if anybody caught the webinar that we did yesterday with Bill Addis and Larry Jacobson. I was bummed I didn't get a chance to talk about Bill Addis's signature series. He's doing this special event, a class just on bonds and interest rate products. So for those of you who are interested, I would highly encourage you contact your counselors and see what they can do to get you in that class. I don't know what the space availability is, but as you guys have seen, Bill Addis is a tremendous amount of information on the financial markets, and we had a great webinar yesterday. You guys can actually view that one if you missed it. You can go to Online Trading Academy's YouTube page, and you'll see it. It's basically our first fall webinar saying how's our economy going. Adam says, Merlin, do you long the VIX during times like this? No, I just use it as a measurement. I don't really trade the VIX. Thanks, Richard. Glad you liked the webinar. It was fun. It was fun to do. We did a different venue, different environment, so it was cool to see us try something different. I think it came out pretty well. So we learned from it, and I think there's 5 or 6 more webinar series that Online Trading Academy is putting together, which would be great. I'll let you guys know about those ones as well. Okay, everybody, that's going to do it for me. I am going to sign out. Of course, if you like today's show, you always help me out by giving me a thumbs up. I always appreciate that. If any of you are new, I would encourage you to click that subscribe button. I know we have some people who have missed Power Trading Radio and don't know about this show. So if you have friends who are missing Power Trading Radio, tell them I'm over here, guys. This is what we do. It's a little bit better because I can do things like this. Have a nice glass of whiskey for my Friday. Anyway, cheers, everybody. Hope you guys have a fantastic weekend. Be safe. Do something fun. Live your lives. I'll see you on Monday. Take care, everybody.